Hi friends, Simit here from InformedTrades.com. In this video I want to talk about overcoming losing streaks, so this video is a little bit more about the psychology of trading, not so much entry and exit points, but I think the psychology is one of the biggest obstacles, one of the biggest reasons why people struggle with trading, and losing streaks in particular is something I think most traders will encounter and sort of learn to need to overcome, or need to learn to overcome. 6 key points. 1 is that losing is the cost of business. On some level, it just needs to be accepted. 2 is, go through your edge and make sure you know your edge. Check your stats, your win-loss rate, your risk-reward. Take a break when you're going through that losing streak. Start with smaller sizes, especially if your confidence is taking a hit. And of course, remember that trading is a marathon game. It's darkest before dawn. First point, losing is a cost of business. That's sort of, many traders lose more than they win. As an example, for instance, I will lose on the majority of my trades, but the winners will be really big to make up for the cost or for the losers. But even for traders who have a different strategy, even for traders who plan on winning most of the time, 70, 80, 90% win rate, almost every trader knows that not every trade is going to be a winner. And as a result, they're not risking too much because that one losing trade could blow you out if you risk too much. But understanding the basic idea of losing and its cost of business, this is one of the hardest parts of trading, and just reminding yourself of that, truly accepting it is essential. When you're going through that stretch, reevaluate your edge. Remember, what is your edge? Every time you place a trade, you want to make sure that you have an edge. You believe that you're placing that trade because you believe something has told you, or there's some signal that's telling you which direction the market's going to go, that there's a higher probability of the market going in that direction. The edge could be fundamental. My edge, I believe, is understanding the economics largely, as well as certain technical formations. You're sort of evaluating support and resistance. Those are all edges. You want to make sure when you're going through the losing stretch that your edge is still valid. Confidence in your edge is, really, really important. Understanding your edge and making sure that you know it deeply and know what to expect is essential. Losing stretch is going to challenge that. If you come out of that losing stretch, though, your faith in your edge will be much stronger. A losing stretch is also an opportunity for you to evaluate your win rate. If you really know your edge, you should also have an idea of what your win rate is and what your risk reward should be. So when you're going to the losing stretch, evaluate your trades. For instance, if I lose 8 out of 10 trades, that's not necessarily a losing stretch for me, or it's a small losing stretch because I'm expecting to lose 7 out of 10 times. If I lose 8 out of 10 or 9 out of 10 times, that is a losing stretch, and I want to reevaluate. Did I place some bad trades? Was my psychology off? Have market conditions changed? So evaluating your win rate in the context of what your target win rate is really important. By the same extension, know your risk reward. When you're going to the losing stretch, it's actually a great time to reassess these things. Know what your expectations are and what you've been achieving through your losing stretch. Maybe you're not that far off, and maybe there's just, the market's just giving you a losing stretch, which is common and very likely. But if it's really off, then that tells you that maybe you need to tweak something in your strategy. Maybe your edge isn't as good as you thought it was. Once your confidence has been shaken, reduce your position size. That will make trading less stressful, let you clear your mind. Also, the worst thing is revenge trading. A lot of people will actually increase their position size once they're losing. This is a recipe for disaster. Even though it'll take you longer to make the money back, maintaining your sanity is what's going to keep you in the game. So reduce your position size once your confidence has been shaken. Clear your mind. Personally, I like to meditate. I like to play a musical instrument. This is very common. A lot of traders do things like this. Clear your mind. Make sure you're able to, assess things calmly. If you're panicked, if your mind's frazzled, that's only going to make things worse. When you're going through that losing stretch, make sure you find a way to clear your mind. And of course, maintain that marathon mentality. Most likely you're going to be trading for a long time. No single trade it's very unlikely that a single trade is going to change your life unless you're risking too much, which of course can change your life in a negative way. So maintain that marathon mentality. A losing stretch, it's to be expected. It's going to happen if you trade long enough. Understand that and sort of know that. Keep persevering. That's about it. If you have any questions, want to discuss this more, share your insight, join us over at InformedTrades.com. Thanks and best of luck in your trading.